Hello, welcome to Geojit Spotlight. Equity markets globally have been very turbulent during the last several days. The collapse of three American banks, Silicon Valley Bank, Silvergate, and Signature Bank, had caused significant market corrections. And yesterday, crisis in the European bank Credit Suisse rattled the European markets, leading to sharp correction in European stock markets. How should investors react to this crisis? First, a brief summary of the American situation. The US banking system is very much different from the Indian banking system. We have some large PSU banks and private banks. US has around 4,160 banks. Most are regional banks, medium small banks, sector specific banks like Silicon Valley Bank, which caters to startups. Crisis happened in the three regional banks. Large US banks like JP Morgan, Wells Fargo, Bank of America, Citibank, etc. are safe and strong. To give you an idea about the size of the banks, it is important to understand that the assets of Silicon Valley Bank is only 5% of the assets of JP Morgan, the largest US bank. There is no possibility of issues in these three regional banks impacting the US banking system. The US Treasury, the American Central Bank, Fed, and the Federal Deposit Insurance Corporation have already initiated measures to calm the markets. Now, coming to the banking crisis in Europe, the Swiss bank Credit Suisse has been in problem for the past several months, many months now. Their current crisis has been triggered by their largest shareholder, Saudi National Bank, refusing to put more money in the bank. When this news broke out, the stock price of Credit Suisse crashed by around 30%. This impacted sentiments, and even the stock prices of other strong European banks also corrected sharply. Now, why are the markets so jittery? It is important to understand that the banking system runs on trust. If all depositors in a bank rush to withdraw money, even the strongest bank will fail. This is called a run on banks. Banks lend the money they receive from the depositors, and these loans cannot be quickly recalled. So even the strongest bank will fail if all the depositors rush to withdraw money. And this can cause contagion effects since all banks are interconnected. The authorities know this, and therefore they quickly move to address the crisis and contain the problem. Now, what is the likely scenario? I feel this issue will be solved. There are no underlying weakness in the American financial system like in 2008. In 2008, there were very strong underlying weaknesses and fault lines in the financial system. Such a situation does not exist now. Therefore, a contagion and a market meltdown are very, very unlikely. Of course, there are people who are skeptical. So, investors need not panic. Investors should remain invested. Safety is in large caps like Reliance, HDFC Bank, Larsen and Toubro, etc. So, in brief, be cautious but don't panic.